China is working to push forward its first foreign investment law, marking the latest move to promote the country's opening up initiative. The new bill aims to further expand access to the Chinese market to foreign investment through deregulation and institutional reform. So how will it affect domestic businesses and foreign investors? What reception is it getting from foreign governments and businesses? And will it help grease the wheels in trade talks between Beijing and Washington? To discuss these issues and more, I'm very happy to be joined in the studio by Jingzhou Tao, Managing Partner of Deckard LLP China Practice, and Anna Tangen, Current Affairs Commentator. We shall also speak via satellite to Hong Hao, Chief Strategist at the Bank of Communications International in Hong Kong. That's our topic. This is a dialogue. I'm Yang Rui. Welcome to our discussion here, gentlemen. The National People's Congress Standing Committee is working on a new draft of the foreign investment law. In fact, this is the second review. Now, what do you think are the major areas for improvement, things that may attract attention from the overseas media?
There are huge improvements in this draft. You know that traditionally we have 3 separate laws dealing with foreign investors: equity joint venture law, contractual joint venture law, wholly foreign-owned enterprise. So ever since China joined WTO in 2001, we thought that we got to merge these 3 laws into one foreign investment law. And the modification mainly deal with the pre-establishment treatment for foreign investors. In the old days, you have all kind of approval for feasibility study, for joint venture contract, article of association, technology license agreement, etc., etc. But now, with this new law, they have abolished all this approval process, put them into a kind of registration only with foreign investors. So these are the major improvement. The second one is maybe more national treatment post-establishment, so that the state-owned companies, private companies, and foreign investors can be in the level playing field for their activities in China. I think these are at least 2 major amendments in this new law.
Do you think this new foreign investment law has a lot to do with the BIT that has been negotiated between the United States and China for years, perhaps since the Obama administration?
Well, yes, in a way, but in another way, no. And what I mean by that is the U.S. has been pushing China to be more open and to allow people in. But what China is doing with the current trade issues, there's 2 tracks on that. The first one is about the deficit. We can argue about that in terms of whether it's being approached in the right way. But the second part is structural. And part of that was opening up China, but another part of it has to do with things like state-owned enterprises and access in those areas. So this isn't really going to settle that part. So it's a very difficult situation. So when I say no, it doesn't have to do with that. Part of it is the fact that China is opening up to the rest of the world. And this is very important to note. This is not simply aimed at the U.S. This is not U.S. companies can only avail themselves of. This is all countries around the world. And so it'll be a very important litmus test to see how the international reaction is.
There's no doubt that the overseas multinationals, particularly those from the United States and the European Union, pay particular attention to the second review by the Standing Committee of the National People's Congress, our top legislator, about whether more preferential policies will be rolled out. Let me cross over to Hong Hao. Hello, Mr. Hong. What do you think of the timing of this second review by the NPC, our top legislator?
Yeah, timing is very interesting. I think some outsider or some observers would say that the timing is a little bit of rush and coincides with the trade talk between China and the U.S. But if you look back, over the past 2 decades of reform and open, we should see that many of these promises had been made some years ago, and now because of the trade negotiation with the U.S., it seems to be accelerating the pace of passing through these laws and allowing an equitable platform for foreign investors to operate in China. So I think we are changing for the better.
Anna, to my knowledge, the draft of the foreign investment law, the first of its kind, actually is based on extensive consultation with some of the Chamber of Commerce, the Chambers of Commerce, like the EU Chambers of Commerce, the AmCham, so on and so forth. What do you think are the major grievances voiced by these overseas Chambers of Commerce?
Well, it's mostly about, first, access, second, the degree to which they can buy into a company and control it, and this is the joint venture law. And the third one they'll talk about, but not very specific ways, is IP. And I think if you actually talk to them, they have done it, almost all of them say that IP practices in China have improved dramatically. So it's not exactly a mirror of where Donald Trump is trying to say China is. If you talk to companies in China versus somebody who is not, it's a very, very different picture.
I think the Foreign Chamber of Commerce play a very important role in this drafting of the foreign investment law, because for years, on the annual review about the Chinese legal environment for foreign investors, they always try to put forward the argument to push China for having a unified legal system for foreign investors instead of have a separate legal regime for foreign investors.
Indeed, quite a few years ago, I remember that the NPC approved a law to unify corporate tax.
Yes.
Corporate tax.
Yeah.
But this time around, it's about the national treatment.
Yeah. For the tax, it was because the Chinese state-owned companies pushed China to amend the law. They said, why we should give foreigners more tax preferential treatment versus state-owned companies. So that's why after WTO, they try to unify this law. But we still have to keep foreign investor law because we cannot have a full national treatment. For some service trade, etc., the foreign company cannot invest. That's why they have this, what we call negative list. If your project is in the negative list, foreigner cannot get involved. For example, telecommunication or newspaper. And there are some limited area where foreign investor cannot invest, or they can invest, but only as a minority shareholder.
Let me go back to Hong Hao. With the adoption of this foreign investment law, what's the chance for foreign companies to have equal access to what is called procurement programs? Procurement programs of the Chinese government, which means billions and billions of dollars each year. Do you believe this regulation will be minimized to lay the groundwork for having easy and free access by overseas companies to the procurement?
Yeah, I think those are very profitable contracts, and I think in principle this new law lay out equitable access for foreign players into this field. But I think, at times we've seen in practice it tends to be different from the existing regulation. So it remains to be seen. But I would hope that, because the law has changed and there should be some enforceable steps to ensure equitable access for foreign players. So let's wait and see, what's going to happen next.
Do you expect to have a breakthrough in drafting this new law, a breakthrough that will quickly and dramatically lower the threshold for overseas companies to either have more shares in the company or to enjoy the same preferential policies like the homegrown companies in China?
Yeah, I think that part we've seen some changes already. Some large foreign investment banks, because they have a fairly large equity base, so they were able to apply for broking license in China, and some of them actually set up a branch office already in Shenzhen, Shanghai region. So we've seen some foreign players already taking advantage of the new laws and trying to get into the financial industry, which used to be closely held by Chinese firms.
Jing Zhou, what do you want to say about the breakthroughs?
Yeah, you talk about the government procurement. You know that when China joined WTO in 2001, China didn't sign the government procurement agreement under WTO. So government procurement is a separate issue. We should not look at this law in very separately, because under this law it clearly said, unless otherwise provided in the law and administrative regulations, foreign company can do this and that. So you have to also try to amend the existing law and the regulations so that the foreign companies' involvement can really get improved. So there are huge tasks ahead to make sure that this level playing field can really be built up.
Okay, I want to, this myth of a level playing field is just that. I mean, if you, I was familiar with the U.S. I was in the government there. There were all sorts of regulations at the state and local level to make sure that although everything is, quote, open, only if you have a local content, only if you fit certain specifications and things like that that are drawn up at the local level, will you be able to actually compete. On the other hand, there's a real opportunity for China for more efficiency. I mean, there are a lot of companies here in China that have been living very, very well simply because they were the only source of something that the government needed. Now they have to be a little bit more, they have to sharpen their pencils and start really competing. But overall, I think I think you'd agree with me, most of the Chinese companies enjoy an advantage simply because of cost. They're making their items here and they're able to deliver through the existing supply chain. So it's not going to be a situation where all of these contracts are going to be rolled back.
Some of the important contents implied in the new foreign investment law, Hong Hao, I'm afraid include, for example, no violation of IP protection and no forced technological transfers, whatever the levels, central or local levels. The issue, I'm afraid, Hong Hao, is how to verify the execution of the new foreign investment. Now, if the U.S. sends delegations to verify, like CVID in the process of denuclearization in the DPRK in the divided Korean Peninsula, that will seriously anger the Chinese authorities for fear of violating our own sovereignty. So what do you think of the catch-22 situation here? What would be the solution?
Yeah, I think it's a sort of a very difficult line to draw, between a violation of our sovereign rights and also, giving enough monitoring of the process, so that IP is strictly protected. I think in the past years we've seen some progress in this field. For example, in the ZTE case, because the U.S. was able to send a delegation to monitor the progress, the compliance progress in the ZTE firm, and therefore, ZTE was able to reopen its door and start doing business again. So, we've seen some examples in this field, to ensure a sort of a smooth process and also ensure the Chinese firms can continue to operate despite some historical incidents. So these precedents actually set some good examples, how to go forward in this IP protection field.
And what do you think of the issue of having a watchdog in some of the Chinese companies to make sure that no violation would happen?
Well, I mean, it sounds good. The question is, how does it go forward? I mean, I think IP, but IP is not exactly what people are thinking. I mean, there's been tremendous strides here. In fact, I would rather be prosecuting or defending an IP case here in China than I would if I was in the U.S. The U.S., it would, pardon this, it would be hugely expensive. Patent lawyers and the whole process, it could take years and years to settle it. We only have to look at all of these huge tech companies who are constantly suing each other ad nauseum over billions of dollars in which they claim either lost revenues or theft of intellectual property, all of this type of stuff. In China, you're going to get a much faster decision. It's going to be less about hyperbole and more about the facts of the case, and damages are going to be awarded appropriately.
I think to monitoring the compliance of IP protection is a problem, because we should not be American-centric. If we say, okay, we let the American to monitor the compliance, what about the European Union? What about the Japanese companies' IP right? So it will be a huge issue about the monitoring. So what we should do is to make sure that at this pre-establishment stage, you should not have such kind of requirement, because in the old days, before China became a member of the WTO, it's clearly indicated in the government document saying that all the product produced by foreign companies must export outside of China. But after WTO, such kind of requirement were abolished. Actually, after that, they said you have to swap your technology with market access. So if you do not want to swap, you are not welcome to China. Now we come to the third stage, whereas you can have free access without a requirement for you to transfer your technology. So we should make sure that the foreign companies can sue the local government or the ministries in case they were forced to do this. I think either with the Chinese court, you can enforce this, or when you have a BIT, because China signed 100-some BIT with different countries, they can also sue Chinese government under the BIT regime. With the US, we have no BIT, so we are discussing, but not yet there. I think there are a lot of remedies already available to make sure that we can have this monitoring program.
Hong-Ha, what do you think of the suggestions by Tao Jingzhou, the lawsuit, that kind of stuff?
You mean lawsuit by some of the companies involved, due to the past incidents, or how to go forward using lawsuit as a method to protect IP? I didn't quite get the question.
Yeah,
sorry.
I think under the Chinese law, you have what we call administrative litigation, where a company can sue government body for the violation of the law. So if we in this foreign investment law, we clearly said that foreign companies should not be forced to transfer technology, while one ministry or another forced the company to do this, so they can go to Chinese court to sue.
Yeah, but that'll depend on all the requirements. And I mean, there has to be something specific that this is outlawed, that there are remedies and appeals and things like this, and where do you go for that? The idea of a private company suing a Chinese government entity is quite new. This would be, as you would put it, good work for lawyers, but I don't know how that would necessarily work unless it's in a venue which is outside where that government is. Even then, I mean, there'd be real questions about it. I like the private lawsuit. I don't necessarily think that even if you conclude a bit, that going through the kind of process that would be necessary, it could take years. These things are very difficult. You have to have a body that's enforcing this. Where do you go? You can't go to WTO because the U.S. doesn't like WTO and might not even certify another judge, in which case the whole enforcement system would collapse at the WTO. So what do you do? International bodies, things like that, they would have to actually be written into the document.
I think, local government will look at the central government. If we have a strong political willingness to enforce IP, to prohibit any kind of forced transfer of technology from the central government, I'm sure the local government will follow through, and you will have very limited instance where you will have this kind of a forced technology transfer. And also, instead of going to the court, you can also want to go to hierarchy, to the ministry, to the Prime Minister's office, try to lodge a complaint. This can also be an efficient way to fight against forced transfer.
I mean, we're talking a lot about this, but let's take one step back, and that is this idea that somehow every company that's come to China has been forced to turn over its IP. That is not true. In certain cases in the past, yes, automotive companies who were coming here would say, okay, the government would say, what are you going to bring? And part of that was this IP. They also, remember, got a lot of benefits right, from investing here. So it wasn't a one-way street. This was a negotiation. But in fact, the automotive companies did not give their first-tier IP. They did not put that in there. What they did was, in many cases, like Buick, they dismantled a fully amortized factory in the U.S., shipped it to China, reassembled it, and started rolling out cars. So this idea that somehow companies are under the thumb of China or something is a little bit hysterical. You make a choice coming to China. It's a negotiated deal. And these are all big girls and boys. They can make their own decision as to whether or not they want to be in this market.
Let me go back to Hong Hao. A lot of the trade disputes between the United States and China actually focus on the status of China, whether it should be regarded still as a developing country, a full-fledged market economic status, or the other way around. And China says, no, we are still the biggest developing country. But some 18 years ago, China was admitted to the WTO, and there is a grace period of 10 years. Now, 17 years on, do you think the U.S. advocacy for the reform of WTO, their concerns actually come from the very focus about whether China remains a developing country or not? What will the reform of WTO actually imply from your perspective?
Yeah, I can see where the U.S. concerns coming from. China has grown dramatically over the past 18 years, especially after joining the WTO. The development of the Chinese economy actually accelerated since then. But I think, at the same time, we must also recognize that the development in China is highly uneven. We have a very highly developed economies on the eastern seaboard and also in the southern part of China as well. But then in the inland part of China, there's still a lot of things that needs to be done, for them to be able to say, those are developed regions as well. Many of the regions in the inland China area, people's income level is very high. I think they can be easily qualified as developing countries. And
excuse me, Hong Gao, the Chinese may complain, and they have good reasons to say to the rest of the world, look, we don't have a monolithic whole. China is such a diversified marketplace. We have the underdeveloped regions in the northwest and the highly prosperous coastline areas like Zhejiang, Jiangsu, Shanghai, Fujian, Guangdong. So what do you think of the uneven development? What does that mean for our WTO commitments? Yeah. Because we are discussing whether WTO should be seriously overhauled to sustain the legitimacy of the multilateral body.
Yeah, indeed. That's why under Trump, there are some proposal to reform the WTO. So you have a U.S. project, you have a EU project, and you have a Chinese proposal. Mm-hmm. So this can be a topic of another day. But overall, U.S. consider that when China joined WTO, they already joined the WTO as a developing country, so they get a higher tariff. They have different service trade which prohibit foreign investors to enter into, or Chinese will have a majority control for this sector and that sectors. And the U.S. want to revisit this tariff level in one hand and the market access on the other hand to substantially shorten the list of the negative list so that foreign investors can have a much larger market access.
Listen, we can talk about what we want about these technical terms, but let's keep something very much in front. First off, GDP, as it's measured today, is not a very accurate measurement. 30% of the things that China is alleged to export come from somewhere else. They're flow-throughs. Okay, take that number. Then take GDP per capita, reduce it by that 30%, and you have a reason why China is still a developing nation. And it's just pure, simple math. There's no things. Just saying that a country that's 2.5, almost 3 times your size has a big GDP is not a real measure. It's just like saying a whale and a minnow. So, you know, they weigh differently, but you know, therefore the whale is somehow. Anyways.
Well, the review of the draft on foreign investment law, Hong Hao and the 2 gentlemen here in the Beijing studio, actually is about whether major progress will be achieved during the current negotiations between Vice Premier Liu He and the U.S. delegation in the D.C. The thing is, a focal point, I'm afraid, is the structural changes. Now, even President Trump dropped the hint, apparently, that it's going to be a process. In the end statement, in the end statement of the president, I'm afraid he was referring to structural changes which are very, very difficult to be made at this moment. So, Hong Hao, are you optimistic, or do you think by the time the ceasefire expires, the United States is ready to impose tariffs?
I think we are optimistic that some sort of a near-term agreement can be achieved, even though longer-term structural changes that the U.S. is asking for probably is a little hasty to be accomplished within a very short time frame. But having said that, though, we've seen that China is moving towards the right direction. Just now we've mentioned the many changes, new laws is being passed, and also new laws is being drawn to allow open access for foreign players as well. So I think change has to be happening step by step. But I'm pretty sure that some sort of a near-term agreement can be reached at the end of this negotiation.
And what can you tell us about the trade war between Japan and the United States in the 1980s? What kind of concessions did Tokyo make to dispel concerns of the United States?
Yes, as soon as Japan started rising as an economic power, there was a real shift in the government to do what was signed in, I think, '73, the Plaza Accord. And basically what that did was pegging a lot the currency to the U.S. dollar. And since that point, although the first couple of years Japan's economy continued to expand, after that it has been moving literally sideways with heavy debts, unable to resurrect its economy. And I think China is very, very cognizant of what happened there and does not want to fall into the same trap. On the other hand, I would be very optimistic. Donald Trump needs a win. He's had a series of, his popularity is down, the market is down, and he's suffered a setback in this government shutdown. So,
I'm somewhat optimistic. I think this new draft law is actually a good faith gesture from China to demonstrate that actually we do structuring reform. We do put the level playing field. We do have foreign companies to get involved, even in the standard setting in China for industrial companies. So all this, I think, is really a good faith gesture. But whether U.S. is buying or not is certainly another story.
Well, so the real issue, does the U.S. want to help China become a normalized part of the world economy, or is it looking to take it down? I would say that it's probably the second.
Thank you so much. That's the end of our discussion about the draft of the foreign investment law, the first of its kind. In fact, what we're going to have during the Lianghui period, the annual plenary session of the NPC, is the second read of this law. I'll see you next time. Goodbye.